Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar traded in a rather choppily manner overnight, although has inked in a fresh high of 71.82. Around the same time, the release of the FOMC minutes this morning, members of the Federal Open Market Committee, or the FOMC, struck a dovish tone at their meeting last month by reinserting language referring to patience in their approach to tightening. This came after the December downgrade on the November rate hikes expected for this year. The statement read, participants pointed to a variety of considerations that supported a patient approach to monetary policies at this juncture and an appropriate step in managing various risks and uncertainties in the outlook. Later today, we do have the Australian Bureau of Statistics, also the ABS that is, to release the January employment figures for the Australian economy, which may have some impact on the price. The economic forecast is expected to add 15.2k new jobs in the month, while the unemployment rate is expected to remain steady at 5%. The bulls at this stage are still tackling this level, which is the 60-day moving average, around 71.60. It is assessed that the technicals are slightly poised to a bullish outlook, but I believe towards 72 cents and with a cap at 72.40 should contain any advancement and see an opportunity to short this market. The euro took a stab at the top side overnight at 113.70 and posted a high, fresh high that is, of 113.70. It is assessed that this level still contains the market, but the technical implications are still a little bit wary of because the MACD is nearly broken over the zero axis along with the RSI. Therefore, could see a break above 113.70 and look towards 114.45 to 65. On the flip side, the US dollar at this stage posted a fresh low of 96.10 before staging a mild rebound. It is assessed, though, that downside risk still remains for the dollar index to 95.40 since the break of 96.40. Support on the day seen at 113.20. The dollar yen at this stage is still a little bit uncertain when it comes to the upside, with the bulls still pressuring the level of 110.95. That was the high last night before a small retreat. Trading around 110.70 at the moment. The fact is I do expect to see the market foul towards the 110.95 resistance and therefore should look back towards 110.35 to 109.70, 75 where I see the target for the dollar yen. The pound's taken a bit of a pause after its impressive bullish rally from this big candle that we saw earlier. It wasn't as forthcoming, and with the bulls backing off slightly, now suggests that we may have seen a high, roughly around the high 130 region. However, I'm not overly confident at this stage in terms of the direction, due to the fact is it's still a little bit mixed. So therefore, I'd rather wait for probably another 24 hours before the call. With this nice, strong bull uptrend in the gold, the market can still progress further after breaking above the 1,326 level. The objective at this stage from the weekly outlook holds towards this level around 1,352.60, where I believe is exposed. Any pullbacks? Well, we did get a low of 36 last night, so that is recognizing the support in this up channel. So therefore, I do expect to see it hold in the day of a range of 36 to 46, but still expect further gains. But we're getting a little bit overbought, so do be careful and keep raising your stop losses in accordance to your risk management. And now we are nearly close to $58 a barrel for oil after it surged again last night. And now putting the technicals a little bit in the overbought region. Do raise your stop losses. Support on the day is at 56 figure, and we could still see a pullback in the short term, but overall this inverse head and shoulders does still promote a potential target of around $64 as an objective. So that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the rest of the day that's ahead.